Hello traders, this is a recap video for Thursday, May the 15th. I will keep this one very short. DAX index left, DAX futures on the right. In this period we had neutral bullish bias on large time frames as long as there is no downside follow through and close below the previous all-time high. For today I have changed that bias to neutral because there was enough of a technical evidence to be a bit of cautious here, to have that cautious stand because of this consolidation. The consolidation turned out to be a bull flag, and what happened here, you see where the red arrow was positioned. What happened here? Low of the day 339, while this untested cash close together with the S1 zone was around 23,350, which gives us only around 15 points of a spike below that. Small poke, up they go. And what is also important, no downside follow through. So no downside follow through below the first breakdown point. Basically buyers again reacted where they should. Today there were also some very important earnings for the German market. Siemens is the number 2 stock in the DAX index weighting, and what happened here? Same thing like on Alliance and like previously on some of the German earnings, there was profit taking right from the start. I have showed you a few days ago BMW chart. They hit resistance on the way up, and then there was profit taking on Siemens and on Alliance. Today there was profit taking from the get-go. There was gap down and go, but gap down and go where? In case of Siemens, right into support. What is the support? The support was this, basically a gap fill, and then they poked a bit below that support. So same thing like DAX on the S1, and boing, up they go. In case of stocks, this bounce, you can look at the percentage. When I was working in a prop trading firm, so we didn't really look at the percentage bounces or drops. We were going for dollar per move or euro per move, and here 6 euros per move on this, which could be done with 1.5 euro stop. So a very good risk reward trade this was, and the same goes for going long on our S1 zone. Now going down to the 5-minute chart, and basically this happened. On Monday, buyers defended where they should. They were also our main support, or S1 zone there. They made a spike and a 300-point bounce. Since then, we got lower lows. And also, for today, we got below the S1 false breakdown long. And that false breakdown should not go anywhere lower than the next zone, which was 315 to 330 on index. And that's this one here on futures, and you see that they're just basically licked that zone. Now, two things were very similar but opposite yesterday versus today, and this is something that we should note. That would be 9:20. 9:20 Central European time, meaning 20 minutes after the open. This was the yesterday open drive higher, which failed, and 9:20 breakdown candle. So game over for the breakout buyers was at 9:20 today, and we got very good down moves. That initial down move and entire down move down toward today's low. Today what happened was the opposite. This was game over for breakdown sellers, and it happened also at 9:20 Central European time. Open was around our support zone. They just dipped below that zone, made first initial bounce, then marginal lower low, which was just a false breakdown. After which we got here a VWAP, which was holding. They regained this zone and used that zone together with VWAP as support. You can also make a fib like this, and you're going to get confluences here. Then we got reaction as uptrust above the pre-market high. Then we got pullback, which was also with confluence. This time, this is quadruple confluence here. And also a time and a place to understand that likely at this point in time, we are looking at the low of a day, since this here was already, see that I position my cursor there, 11.15. So this is the vertical line for the US Open, and this, as said, after this pullback, if not even before that, it was clear that we already have low of a day set. We can apply the inverse logic like here, when market did this and went below the VWAP. Here, completely the opposite, went above the VWAP, used VWAP as support. Also false breakout here, false breakdown here. High of a day, low of a day, same timing. Next, small reaction there from the gap fill zone. This was the gap fill zone because previous close was there. After which they made marginal higher high, but again pullback was bought. Why? Because that pullback went down just over the pre-market high, and there was also our level which we were using as gauge of a market strength, because before on Monday and on Wednesday, as they went down through it, on regaining of that level, we got buy reactions, and still no close below the previous double top all-time high, and also no downside follow through, which brings us back to neutral bullish bias on all time frames, meaning buy the dip. So this was the buyable dip as well, and then zone was regained with this final push. They were using zone, previous day close as support. Then market reacted in front of the resistance area, quite wide for a day trading. And when this is the case, as soon as you observe this is happening and you want to, for example, fade this area, you are pushing your limit orders, if you want to fade this area with limit orders, higher, because it's already reacted from it, and you're having higher lows behind your back. And we know what the daily 8-year was for today. It dropped below 400 points a few days ago, and for today it was around 370, 377. So when DAX is strong, US market is strong also, because reaching this area happened in the US RTH session. Remember that this line represents a US Open. No need to be stubborn there. Okay, you can try to fade this. Why would you try that in the first place? Because that was daily 8-year exhaustion move at the top end of that. And you got nothing here for 20-25 minutes. It's a good idea to give up of that and to close. Second thing I showed you 2 days ago, S&P chart and the origin of the US CPI. And I strictly said here on Wednesday, watch overnight low, overnight high, previous day high, and origin of the US CPI. We got the reactions from the overnight high, from the overnight low, with spikes, with false breaks, and what market did, day to day tested the origin of the CPI move, making 2 out of 3 of concepts for news-driven moves true. News-driven moves tend to retrace, that would be this, and also market that is likely going to react from the origin of the news-driven move, and that would be this here. So on the way down, making a parabolic move into this bounce. And this was US data, important US data today, US PPI, unemployment claims, retail sales, all of that produced a good size candle, which they held, and at the end, you see, very, very good upside moves for anybody who applied those 2 out of 3 news-driven moves concepts and went long here around 11, which means obviously in the for them overnight session. So that would be it for this edition of DAX recap videos. You have seen news-driven concepts in play on S&P. You have seen false breakout and false breakdown in play on DAX, and you have seen on higher time frames the no downside follow through concept, and you have seen on Siemens the gap fill. All of these concepts are in the easier things to understand, and all of these concepts and setups are very profitable ones. So that would be it for this edition of recap videos. As always, I wish you a pleasant evening and good trading.